All right, so now we're just going to go over an overview of tax filing and credits. So next slide. Okay, so here are some recent changes to state and federal tax credits that can put money in the pockets of low-income Californians. So we have in 2021, Congress modified the federal earned income tax credit. I'm not going to read everything. You can receive these slides after. And in regards to the federal earned income, the earned income tax credit for 2022, the federal earned income has reverted back to pre-2021 eligibility rules. You must earn under $59,000, and you must have been 25 years or older in 2022, or were a parent at any age in filing head of household. You may qualify without a qualifying child if you are over 25 and under 65. At least one spouse must meet the age rule. And then we have the expansion of the California Earned Income Tax Credit that's available to anyone age to our foster youth ages 18 to 24, filing as single, no children. And as long as they earn income between $1 and less than $30,000, and all custodial parents are eligible regardless of age. And then we have the new foster youth tax credit, which I'll talk a little bit more in the next few slides. And then we have both the state and federal governments established child tax credits and removed the income requirements, which is very important, at least for our foster youth. So here we have the new foster youth tax credit. We're very excited about this. This is about $1,000 refundable credit to foster youth between the ages of 18 to 25. California is the only state that has this new foster youth credit. So when we're doing taxes with our young people, we're telling them we're making history. We're the first state that has this available to our foster youth. And so some of the eligibility requirements for the foster youth tax credit. So they have to have a social security number or an individual taxpayer identification number. That's for our young people who are undocumented. There is a checkbox in the state return that they have to indicate that they were a foster youth and that they're providing consent for the Franchise Tax Board to confirm their eligibility for the credit with the California Department of Social Services. And then they have to qualify for the Cal EITC, lived in California for 6 months or more in 2022, and then earned income of at least $1 and less than $30,000. And then on the juvenile probation and the social services side, they have to be between the ages of 18 to 25 and in foster care at the age of 13 or above. And since this is the first year of implementation, it is the heavy lift to verify all the foster youth who file. After this year, we only have to verify the young people who are filing their taxes for the very first time. So once they confirm eligibility this year, then they don't have to do it ever again. All right, and so why is it important to focus on tax credits and refunds for foster youth? So here's a list of areas of why we think it's important. But from a systems perspective, counties are required to support foster youth with financial literacy skills, which includes tax filing. Foster youth who age out of the foster care system may not have an adult supporter to guide them in filing their taxes. And research conducted by Chapman Hall in a 2020 report, Findings from the California Youth Transitions to Adulthood Study, Conditions of Youth at Age 23, indicates former foster youth experience economic hardships at a higher rate than the general population. And some of those common hardships include not having enough money to purchase clothes, have their cell phone or TV services connected, not having enough to pay rent, and experience food insecurity. And so, when we look at these items, to decrease poverty, foster youth served in this project on average, the first year of implementation in Santa Clara County, received a rebate of around $2,700. That was the average. That money can be used to pay off debt, put in their savings, or purchase daily living necessities. It supports parenting foster youth with their children. In these last year tax season, it increased their income from like $16,000 to almost $25,000. And then it educates and teaches foster youth tax filing skills. As noted earlier, this is a requirement for counties to ensure that young people learn these very important financial literacy skills. It also helps to uncover identity theft and fraud. So in Santa Clara County, when we did the first year, we served 45 current and former foster youth with filing their taxes. 15% of those youth experienced some type of tax fraud. And then it saves money from having to pay a preparer, like, don't want to say it, but like an H&R Block. I had a young lady, the first year I filed taxes with her, she paid $400 for H&R Block to prepare her taxes, which she didn't make a lot of money. So that's a big chunk of money for her to have to spend to file her taxes. Filing taxes helps to have accurate income verification when applying for financial aid and public benefits, such as CalWORK, CalFresh, and their FAFSA application. This ensures that they have a verified income, and it can help to increase their financial aid and also perhaps increase their public benefits. So now some background on the ins and outs of tax filing and credits. So here we have, filing a 2022 California income tax return. You can start filing the Franchise Tax Board. They start receiving their filings on January 1st, 2023. And you can use the FTB's free CalFile service starting January 17th, 2023. All Californians automatically have until mid-October 16th to file their taxes. But you want to actually, if you have to pay, you could either, ask for an extension, but a lot of times April 18th, and now because of a lot of the disasters that have occurred in California, there's a lot of counties that have the extension up until May 15th. So you definitely want to pay any tax you might owe to avoid any kind of interest and penalties, or you can ask for the extension up until October. Okay, and then here are some tax credits. We have the Cal EITC, the Young Child Tax Credit, the Foster Youth Tax Credit, and the Federal IETC. All four of the cashback credits, meaning they can lower any tax owed or provide cash back to you directly. Combined, the credits can be worth hundreds and thousands of dollars for individuals and families, depending on income and the number of dependents. You won't get any of these credits if you don't file your state and federal taxes. There are no restrictions on how the money can be used. Our dedicated foster youth sites encourage foster youth to put this money in their savings, pay off debt, use towards their children, et cetera, et cetera. And then the federal ITC, this is very basic information. A lot of this can be found on the IRS website. It's worth people's time to look into this credit. It can be a bit larger than the state credit. According to the IRS website, the federal ITC refunds by law won't be issued before mid-February. The Franchise Tax Board doesn't hold the Cal EITC refunds. It issues them within the same timeframes as any other refunds. The Cal EITC and the YTC, just a quick history, the Cal EITC was created in 2015 as a supplemental to the federal EITC, which was born in 1975. The program has expanded considerably in recent years, affecting many more low-income Californians, which includes our foster youth. Why? The age and income range have been expanded, and a couple of years ago, the state added the YTC, a credit initially worth up to $1,000. It's now $1,083 for families with at least one child under the age of 6. In the first 4 years, about $1.1 billion in Cal EITC credits were awarded. In the last 3 years, the amount of Cal EITC awarded has been more than double the level awarded in the first 4 years. So it is definitely making a difference for our families. Cal EITC basics, you must have a social security number or an individual taxpayer identification number, earned at least $1 and not over $30,000, have earned income from an employer or self-employment, and are at least 18 years old or has a child. And other basics, you have to have lived in California for more than half of the year. Do not use the married RTB filing separately filing status, with some exceptions. Didn't have a 22 investment income exceeding $4,389 and cannot be claimed on someone else's tax return. And a lot of this applies to our young people because they age out of the foster care system. And so there's many of them are not being claimed on someone else's taxes. Qualifying in terms of qualifying for Cal EITC, the process is the same for those filing with a Social Security or I-10. The Franchise Tax Board treats I-10 filers the same way as any others filing their state tax returns. FTB might occasionally seek to verify a taxpayer's identity and eligibility for the credit by requesting a copy of their Social Security card, for a filer using a Social Security number, or a copy of passport or any other identifying document for an I-10 filer. The FTB does not share the information from tax returns with any federal or state agency for the purpose of determining someone's immigration status. FTB will only disclose taxpayer information to another agency in very narrow circumstances, such as for tax administration purposes, or when presented with a subpoena or arrest warrant in a criminal investigation, and only when authorized by law. So the Young Tax Child Credit, here are some basics. You have to qualify for the Cal EITC, except for the tax year 2022 and forward. It has expanded to families with no income. Must have at least one child under 6. The maximum award per tax return is $1,083, and the average award last year was around $930. Like Cal EITC, the Young Child Tax Credit phases out as income rises. For those with earned income above $25,000, the YCTC credit gradually declines to $0 once annual income hits $30,000. And we'll show you this in upcoming slides. Sometimes it's like a tongue twister with all these acronyms. So for the foster youth tax credit, which is, like I said earlier, new this year, we're really excited about it. First year available, 20, like Cal EITC and the YCTC, the foster youth tax credit reduces the tax owed or offers cash back. The maximum credit for the tax year 2022 is $1,083 per qualifying individual. And if you have a primary taxpayer and a spouse, they both can, and they were both current and former foster youth, they both can receive the foster youth tax credit. The foster youth tax credit will be adjusted annually for inflation. The credit amount phases out gradually as earned income exceeds $25,000, same as the YCTC. The foster youth tax credit is claimed on the same form, the FTB 3514 used for the Cal EITC and YTC. E-filers follow prompts specific to their software to claim this credit. You might qualify for the foster youth tax credit if you meet any of the following requirements. The Cal EITC between the ages of 18 through 25 at the end of the tax year, were in foster care on or after their 13th birthday, and they were in the California foster care system. And with that, with qualifying, they have to be in a very particular type of foster care placement. And in the tax filing software, they do have like what that the specific placements are, which ones are considered to be a eligible for this foster youth tax credit. All right, so here are some income limits and the maximum credit by family size for the state and federal ITCs. You see the maximum income, some can have and still qualify for the Cal EITC and the federal EITC. There's also the maximum credits that can be awarded for tax year 2022 based on family size. As you can see here, for some people, the combination of the credits can really add up. A family with 3 or more children can qualify for $10,352 in combined Cal EITC and the federal EITC. Plus, if that family qualifies for the young child tax credit, which isn't included in this table, that can add as much as $1,000 more. So by maximizing out everything, you would be looking at more than $11,000 in combined state and federal credits, but most families don't get that much. Okay, so on this graph, this is a relationship between the tax year 2022 income, family size, and the Cal EITC credit amount. A few quick notes: the chart shows the income range, the rectangular boxes, for the maximum Cal EITC credit based on the family size. Each colored line indicates the number of children. So initially, as income climbs, so does the Cal EITC award, but then the credit amount peaks and phases out as income increases to $30,000. If you look at the top 2 lines for filers with either 2 or 3 children plus, the maximum credit tops out when annual income reaches about $9,000. Those getting the maximum credit will have very low incomes. This slide shows how filers who qualify for the YCTC will get the full $1,083 credit if they have earned income between $1 and $25,000 in the tax year. After $25,000, an income with the credit begins. As they say, it phases out, meaning gradually ratchets down to $0 once income has hit $30,000. With the foster youth tax credit and the YCTC, for every $100 earned, income exceeds the $25,000 threshold, the credit declines by nearly $22. So here on this slide regarding fraud and identity theft, the main takeaway here is that the IRS and the Franchise Tax Board does not call to threaten taxpayers, and they do not ask for credit card or bank account numbers. This is something that we emphasize with our foster youth. And we recommend that you simply hang up if you receive threatening or fishy phone calls. Again, you never give out your information. You should be suspicious anytime someone tells you they can settle a tax debt for pennies on the dollar. Also, we encourage taxpayers to be aware of what we call ghost preparers. A ghost preparer does not sign a tax return. They will print the return and tell the taxpayer to sign it and mail it to the IRS or FTB. So we're always really educating our foster youth about this. Typically, before someone would receive a phone call from the FTB, they would get a letter. FTB has a letters webpage at ftb.ca.gov where taxpayers can verify and learn more about a letter they received from the FTB. The FTB also has a scams webpage where you can learn more about what to look for and how to file a report of a suspected scam online. JBAY, myself included, has conducted presentations to foster youth across the state. We always encourage foster youth, if they receive a letter from the IRS or FTB and they're not sure what is being asked of them, to reach out to their social worker, juvenile probation officer, their dependency attorney, or a trusted adult supporter to help them to decipher what is actually being asked of them and help to remedy whatever it is. If the FTB does not ask for more information from a taxpayer claiming Cal EITC or the foster youth tax credit, the request will come on a letter we call the FTB 4502, part of which can be seen on this slide. What do taxpayers and preparers need to know? If the taxpayer does get the letter, the FTB is just trying to verify the person qualifies for the credit. The letter would be sent to the taxpayer within a month of the tax return being filed. Cali ITC and the YCTC won't be awarded until the taxpayer responds to the FTB and verifies the qualifications for the credit. Here we want to cheerlead for the FTB's online resources. This is the updated Cali ITC landing page. And it's a starting point for what's to become the Cali ITC family of credits. You can choose the eligibility and credit information to reach the long-standing page with most of the information you need, including the Cali ITC Form 3514 and the accompanying instructions. You can link to the dedicated foster youth tax credit and the YTC pages. You can launch the Cali ITC calculator to get an estimate of what you could possibly receive. And on the left, we also have a link to our Cali ITC outreach materials page, which I'll show you in a minute. And also on the bottom of this page, which you don't see here, is a link to the free tax help with the VITA programs that are across the state. And so that is, another avenue for, people to file their taxes, is to look up the local VITA site in their community. I wanted to show you this scenario. This scenario, we have a 19-year-old foster youth with a 3-year-old child filing with the head of household status and making $11,000. They're not married and support a house and a qualifying person. So when you have a refund, so this shows that, they could get, $6,471. When our foster youth have a refund, we encourage our VITA volunteers and our dedicated foster youth sites to really have a conversation with the young person about, again, how to save that money, put it in savings, purchase any items that they need if they have children, pay off debt. And some of our young people, unfortunately, we've experienced that they do have to owe money. And in those situations, we, talk to them about if they have a W-2, how much are you, what's your withholding on your W-4, with your employer? Maybe talk with your HR department. Attend one of the independent living program financial literacy classes, talk to your transitional housing case manager, and really just help them, educate themselves on what they should be, what their tax withholdings should be with their W-2s, and then just other ways of how to learn. Some of the young people are interested in investing. Connect them with, a local bank or a credit union to see what resources they have. So we're always using those opportunities to educate our foster youth. And here's the dedicated site for the foster youth tax credit. So it talks about the eligibility requirements, the 3 ways our foster youth status can be verified. So this has a lot of information for our foster youth and for anyone who is supporting them with filing their taxes. And then the JBAY, here are some of the tax filing publications that JBAY has created. We have the really important one here for us is the JBAY Foster Youth Tax Prep Checklist. We use this in all of our presentations, all of our trainings that we've done across the state. It really, just is a thorough checklist of what forms the young people need, when they file their taxes, what identification is needed, their driver's license, social security number, and if they don't have a W-2 or if they've lost their W-2, how can they get it? And so it, also helps their adult supporters, like their social worker, juvenile probation officer, court-appointed special advocates, anyone who's as the youth sees as their, support person. It really helps them, to go through and, have that conversation of what do you need to file your taxes. And then we have a tax filing guide, we have outreach toolkits. So there's a lot of different, publications that JBAY has created to help our foster youth and their supporters. And then we have our step-by-step filing guide. So this goes along with the myfreetaxes.org platform. And it really is it's a well-planned, thought out guide for foster youth who feel like they can do their taxes on their own. And then we have our tax appointment roster. We have 58 counties in the state. Not every county is working with JBAY this year in ensuring that foster youth have access to free tax filing services. So the counties that are participating, we have a roster, and people can click on whichever county they live in and get information on where they can file their taxes. For those counties that are not involved with us this year, we refer young people to the local VITA program and just provide them with the tax prep checklist so then they can get prepared for their tax appointment. And then we have some tax filing videos. So along with the self-filing guide, we have a video of how a young person can ensure that they get to the foster youth tax credit in the state section of their return. So we have for the VITA volunteers how to go in and ensure that they click that box for the young person, and then the guide for the foster youth. And then we have different, foster youth credit printed flyers and posters. This is available to all the nonprofits and county agencies that are, on this journey with us and getting the word out for our foster youth. We have an order form, and a lot of our counties have been ordering these, putting them up in the youth centers, sending mailers out to foster youth who are eligible for the foster youth tax credit. And then here are some slides just on the steps to claim the foster youth tax credit. As I said, we have a video and we have the step-by-step guide. This just shows like how, when you're in the state return, where you need to go to claim that credit. And some really important things, when you get to the state credit, it's sort of buried in there in the state specific credits. And so we're always really, making sure our young people, when they're filing on their own, they go to the correct page. Because again, like I said earlier, it's really buried in the state section. So we're really trying to make sure all of our young people know, hey, it's in there. You just got to keep going to the next page and you'll get there. So again, this just illustrates where the foster youth tax credit is located. And then these two boxes here, number 6, these are the really important ones. This is where the youth or the preparer clicks the box saying, yes, the tax filer is eligible for the foster youth tax credit. And then on the second box under 6, this is where the young person needs to click the box, yes, that they consent for the franchise tax board to verify their eligibility with the franchise tax board. So these two boxes are the most important for the foster youth tax credit. And so for proof of eligibility, so if a consent and or proof of a dependency letter, that's what we call letters for our young people when they, when they're looking to file their FAFSA applications for education. A lot of times they need a dependency letter, and now for the foster youth tax credit, they can also get a dependency letter for that as well. And if they don't consent, if they don't click those two boxes to consent, they can upload a letter into the tax platform. But if that does not result in a satisfactory proof of eligibility, a foster youth may be contacted to provide additional proof. So they can, always put in another letter, because some letters, they have to be on specific letterhead and have specific information. So they can call or email the California Department of Social Services, and or they can contact the Office of Ombudsperson that's here in California, and they can email or contact either of these agencies, and they will get them the letter required for the foster youth tax credit. And then next year, JBAY will release a social media toolkit for everyone to continue to spread the word about the resources and available credits and free filing strategies. We hope you'll take a moment to follow us and spread the word. Together, we can reach thousands of young adults, boost their income, and boost our local economy through tax refunds. Then you can also subscribe to JBAY's policy newsletter for regular messaging. And then now I'm available for any questions.
If there are no questions, I'll go ahead and just interject a couple of points. I think it was great work that JBay is doing, and I just wanted to highlight, especially when you're dealing with suspected identity theft, it is always important to connect any taxpayer, but especially foster youth, with a legal services professional, because those cases can be extremely complex and can take a long time, currently taking about 430 days to resolve. In addition to the complexity of the cases, depending on the level of tax fraud, there may be even a warrant for arrest for the taxpayer. So when they try to go to file a complaint, a police report to report the identity theft, they could also be arrested. So it's really important to kind of talk them through the potential risks and advise them what their rights and responsibilities are. So tremendous work that JBay is doing. I'm really happy to be a partner organization with JBay.
Yeah. And Evan, I would just like to add with that too. So counties, they are required to, it's a state and federal mandate for counties to run youth credit reports to see, yearly if anyone is using, the foster youth identity to, open any kind of accounts. That was under my unit when I was working for Santa Clara County Social Services. And so I had a social worker that was dedicated to that in our county. And like I said earlier in the presentation, that first year, we served 45 young people, and 15% of them had some type of tax fraud. And I see it over and over again. Just this weekend, I was with a young man in Santa Clara County, and his sister, who he no longer has contact with, she used his social security number to get a job. So we had to, we created a identity protection pin for him through the IRS. And now we're referring him to the legal services in Santa Clara to help him clear up anything he needs to in that area. So it is very important.
Great. And one other thing I wanted to touch on was the extension that Carla had mentioned. So it's really important distinction. Generally, the extension that the IRS allows you until October is only an extension to file your return, not an extension to pay. So some people don't understand this and they can find themselves in trouble thinking, oh, I didn't file, so I shouldn't have to pay. But the IRS views it as two different responsibilities of the taxpayer, the responsibility to pay and the responsibility to file. And the extension to October is only for the extension to file. If you know you're going to owe, then you need to pay, work with your tax preparer to figure out how much you are going to owe using the tax withholding calculator, or estimating how much you paid the previous year, and pay that, and then file later when you based off the extension. But the great thing about this extension that President Biden and Governor Newsom allowed the state of California to have, based off the state of emergency they declared because of the extreme weather we've been experiencing, is that they're allowed taxpayers within certain counties. I wanted to highlight that, not the entire state, within certain counties, to be eligible to have an automatic extension to May for both their legal requirement to file and their legal requirement to pay the taxes owed if they do owe taxes. So that is a tremendous help and relief to taxpayers who need it. If you do not need it, we do strongly advise that you work with VITA sites early, because depending on the capacity or the bandwidth of the VITA site, they may not be available all the way until May. Some are hoping and trying to make themselves available until that extended deadline, but a lot of them have their set budgets, and the volunteers that are scheduled to volunteer only until the original April deadline. So that is also a factor to consider. If you don't need it, please don't wait until the May filing deadline. You will have more availability and access to free services from programs like the Volunteer Income Tax Assistance, VITA program. if you do it within the regular filing deadline and get it done by April 18th. Any questions? Okay, if not, I'd like to also add one more thing. I'd like to add that please keep in mind that the United States tax system is a pay-as-you-go tax system. So that means that you're supposed to be paying taxes as you go. There's a misconception. People think, oh, I just have to pay once at the end of the year. So if you're a W-2 wage earner, you're getting taxes withheld throughout the year that will hopefully cover the entire amount, and then you'll be eligible for a refund depending on your tax profile. And if you are an independent contractor or self-employed, then you are required to make estimated quarterly tax payments. And if you're not making those tax payments, then you will be potentially subject to penalties and interests for not paying on time. So please make sure that you clarify what your employment status is when you are starting a new job. Are you going to be an independent contractor? Are you going to be a W-2 wage earner? And plan accordingly to make sure that your withholdings are being withheld appropriately with once you complete the W-4 form with your W-2 employer, or that you're making estimated quarterly tax payments as an independent contractor. And I would also like to highlight that next month on April 20th, we'll be having part 2 of this educational series regarding tax rights and responsibilities, where I will be discussing more about what your rights and responsibilities are in the general context, defining what is a tax controversy, which is basically a dispute between a taxpayer and the relevant taxing authority. So within California, the relevant federal taxing authority would be the IRS, and the relevant state taxing authority would be the Franchise Tax Board, the FTB. So if there ever comes a time where the taxpayer reports something on a tax return, or the relevant taxing authority assesses something against them based off third-party reporting, and there's a disagreement between the taxpayer and the taxing authority, whether it be the IRS or the FTB, that dispute, that disagreement, is what is defined in the legal context as a tax controversy. And the Low-Income Taxpayer Clinic can provide direct representation to eligible taxpayers with that tax controversy. And I'll talk more about that in part 2 of this educational presentation on April 20th, defining what are some of the in-scope services, out-of-scope services, eligibility requirements, and go more in detail about the rights and responsibilities as a W-2 wage earner and as a independent contractor. And finally, this one is time sensitive. So Section 6109 of the Internal Revenue Code requires all taxpayers to include an identifying number, a taxpayer identification number, in their returns. And as Carla had mentioned earlier, especially for undocumented individuals, if they don't already have an ITIN, an individual taxpayer identification number, they should apply for one as soon as possible so that they can properly file their return on time. This process does take time, so you do need to be proactive and do this as early as possible. So if you haven't already been issued a Social Security number for whatever reason, and you are in need of a taxpayer identification number, you need to report income that you've earned, then you need to file for an ITIN. And keep in mind, ITINs that have been approved generally last 4 to 5 years, but if you don't use them for 3 consecutive years, they will automatically become ineligible and invalid, and you will have to renew them. So either get it renewed if you suspect it's expired, and or apply for a new one. Also, the IRS announces on their homepage every year certain ITINs automatically expire, and they list them out on the IRS homepage. So please keep an eye on that. And back to my earlier comment about only certain counties were approved for the May extension to file and to pay. you can look at FEMA's homepage to get a list of the counties. But Orange County and Los Angeles County are both included. FEMA's website is not showing Orange County, but Governor Newsom's homepage is showing that Orange County was included as one of the counties. Okay, if there are no questions, we'd like to thank all of you for joining us today. Thank you, Carla, for partnering with Public Law Center's Federal Tax Clinic to provide some really important information.